The announcement delivered by Keir Starmer regarding the revised state pension payment schedule for December 2025 has created an immediate wave of attention across the country, particularly among people aged 50 and above who rely on clear, dependable information about their income. In a year when the cost of living continues to place strain on retired households, the Prime Minister's statement carries unusual weight. People want certainty as they plan for the holiday season, and Starmer has attempted to provide exactly that with a new structure designed to guarantee timely payments, reduce anxiety, and reinforce the government's commitment to protecting older citizens. Even if you feel you have become accustomed to how unpredictable the winter months can be, especially when bank holidays interrupt the usual rhythm of payments, the changes for December 2025 are meant to ease those pressures and allow pensioners to feel that their needs are not just being acknowledged, but taken seriously. Under the update, the familiar 4-weekly state pension cycle continues, based on the last 2 digits of each person's national insurance number. Those with numbers ending between 00 and 19 receive their payments on Mondays, those ending between 20 and 39 on Tuesdays, those ending between 40 and 59 on Wednesdays, those ending between 60 and 79 on Thursdays, and those ending between 80 and 99 on Fridays. This structure has served the pension system for years, and the government has chosen not to interfere with the broader rhythm throughout the rest of the year. However, December presents a challenge every year because public holidays can disrupt banking operations. For that reason, Starmer confirmed that anyone whose payment would normally fall on a bank holiday in December 2025 will receive their money earlier, typically just before the final working days leading up to Christmas. The simplest way to understand it is this: if your scheduled payment falls on or near the Christmas bank holidays, you will receive it in advance so that you are not left waiting through a long weekend or into the new year. These adjustments might sound small on the surface, but if you rely heavily on your state pension to keep up with winter fuel payments, rent, electricity bills, or weekly groceries, then you understand how critical timing becomes. Imagine someone living alone in a terraced house in Hull, or Cardiff, or Glasgow, tracking every bill down to the last pound. For them, a delay of even 2 or 3 days could mean rearranging direct debits, delaying a purchase, or worrying whether they will have the funds to cover a bill landing just after Christmas. By guaranteeing earlier payments for those affected by the holiday schedule, Starmer is presenting this not as a political tactic, but as a way of showing respect for the everyday realities older people face. In the same announcement, he reaffirmed his government's position on the triple lock. The triple lock ensures that the state pension increases each year by whichever is highest: the rate of inflation measured through the Consumer Prices Index, average wage growth across the United Kingdom, or a rise of at least 2.5%. This mechanism has become a cornerstone of retirement income, and many pensioners view it as the single most essential guarantee they have. Starmer stated that his government will not abandon it, dilute it, or hide it within a broader review. Instead, he has positioned it as a fixed commitment, not a negotiable policy. As of April 2025, the full new state pension increased by 4.1%, rising to £230.25 each week, which equates to just over £11,970 annually. For those who reached pension age before April 2016 and therefore received the older basic state pension, the full rate increased to £176.45 per week. These numbers may not transform anyone's financial circumstances overnight, but they provide stability in a period where many households are concerned about fluctuating energy costs, climbing food prices, and the difficulty of stretching every pound throughout the winter. When Starmer presented these details, he emphasized that dignity for older people is a fundamental expectation, not an optional luxury. He acknowledged the dozens of letters his office receives weekly from pensioners describing the stress caused by irregular December payments in previous years. One woman from Newcastle wrote to him explaining how a delayed payment forced her to borrow money from her daughter just to cover her winter heating bill. Another couple from Norwich expressed how the uncertainty made them reluctant to travel to see family during the Christmas period because they were unsure whether their money would arrive in time. Stories like these have shaped the tone of the announcement. Starmer's message is not only administrative, it is emotional, built on the understanding that financial reliability is inseparable from peace of mind. Yet, not everyone is convinced. Critics on the economic right argue that the triple lock places long-term pressure on the Treasury. Some believe that guaranteeing pension increases indefinitely, regardless of broader economic conditions, could eventually require either higher taxation or reductions in other public services. Think tanks have warned that as life expectancy rises, more people will draw from the state pension for longer periods, potentially expanding the cost faster than the economy can comfortably support. However, Starmer counters that the question should not be whether older people deserve predictable income. Of course they do, but whether the political system can embrace policies that treat aging not as a burden, but as a stage of life deserving protection. He insists that every government must balance compassion with sustainability. But in his view, the well-being of pensioners cannot be the first area carved away whenever budgets tighten. Many of you watching this will connect personally with these issues. People in their 50s today grew up in a Britain dramatically different from the one they see now. You watched industries vanish, communities shift, and economic landscapes change. Many of you entered the workforce during the 1970s or 1980s, paid national insurance contributions for decades, and built your lives around the expectation that the state pension would be there for you when you retired. Whether you retired last year or are planning to retire in 5 or 10 years, you want to feel confident that the system will hold steady. The December payment schedule is only one part of that larger story, but it serves as a kind of symbol, a demonstration that your needs still shape government priorities. Think of a man named David living in Manchester, now aged 73. He spends his winter mornings tending to the small vegetable patch in his back garden, something he has done since the day he left his job as a bus mechanic. His state pension arrives every 4 weeks, and he uses it to cover his rent, council tax, and his prescription charges. In December 2024, an unexpected delay meant his pension came 2 working days later than he planned. He managed, but he described the uncertainty as unnecessary stress. Under Starmer's revised schedule for December 2025, someone like David would receive his payment ahead of time, allowing him to settle his bills before the festive period even begins. This shift may not seem dramatic to everyone, but for individuals like him, it represents respect, consideration, and predictability. Older audiences often notice when political announcements sound vague, rushed, or half-formed. This one, however, is carefully planned. Starmer's government has been attempting to rebuild trust among older voters following a decade of turbulence, contested budgets, and changing promises from multiple administrations. By placing pension security at the center of his December planning, he is signaling that pensioners are not only an economic category, but a community with real concerns. He wants older voters to feel that the government is working with them rather than around them. Another dimension of the new schedule involves the way banks and financial institutions operate during the holiday period. In the last week of December, automated systems pause, processing schedules tighten, and clearing cycles slow down. Pensioners have grown used to this, but many still feel left behind when payments shift with little warning. With the new approach, the government aims to ensure that every payment is made on a standard working day before operational slowdowns begin. Analysts estimate that this will allow millions of pensioners to have their funds ready for use at least 48 hours earlier than last year. That could cover a week's worth of groceries, a winter fuel payment supplement, or a train ticket to visit family on Christmas Eve. It is not only about money, it is about agency, allowing older people to make choices without worrying that their pension will show up late. To strengthen the pension system in the long term, Starmer has also revived the Pensions Commission to examine wider issues. While the Commission will look into workplace pension savings, long-term sustainability, and how to support self-employed workers who struggle to save consistently for retirement, it will not examine or modify the triple lock. That exclusion is deliberate, signaling that older people's income is not up for debate. This decision has been welcomed by many pensioner groups who feared that any review might quietly introduce cuts or raise the pension age again. For now at least, Starmer is drawing a line, insisting that the rights of pensioners must be protected while the broader pension system is re-evaluated. For people aged 50 and above, especially those approaching retirement, this announcement should serve as a reminder that planning ahead remains essential. You should ensure that your bank details held by the pension service are accurate, that your communications from the Department for Work and Pensions are up to date, and that you take note of the revised December timetable. While the government has pledged smooth delivery, your own preparation will make the transition even easier. It is not unusual for people to overlook small details, a change in bank account, a recent move to a new home, or a letter that went unopened on the kitchen counter, but taking time now can prevent frustration later. As we approach December 2025, the bigger message remains clear. The United Kingdom is aging, and with that comes the responsibility to support those who have spent their lives contributing to the nation. Starmer's announcement is one piece in a larger effort to rebuild the contract between the state and its retirees. Whether you view the announcement with optimism, caution, or a mixture of both, it offers something tangible, a promise that your state pension will arrive earlier if a bank holiday threatens to delay it, giving you certainty when you need it most. If hearing updates like this helps you stay informed and confident about your financial future, consider liking this video and subscribing to the channel. Staying connected ensures you never miss key information that can impact your pension, your savings, and your peace of mind throughout the year.